Hello, hello, hello. Hope you guys are having a good day. So today we're going to be looking at top 10 companies to buy going into December 2024 and onward into 2025. These are companies that I'm looking to continue adding and hold forever. So looking at the moves that I made today, I did buy some more SoFi, bringing up my shares to 600 shares. I did buy some more HITI and some ASTS because I feel like it's consolidating and it's very much in a fair value for the future performance of this company. So let's get in with number one is SoFi. So this doesn't come as a surprise because this is my number one stock pick in my portfolio. It is my biggest single stock position, excluding ETFs and cash, all that stuff. This is my number one stock pick, and it has performed very well over the last couple of months. And the thing is, it's just getting started. There's so much more upside. So we can see that I have 600 shares in this company. Average cost is $4,800, and now it's worth $8,200. And I really do feel it was super undervalued when I first started buying, and now it's just approaching fair value. So why do I think that? Well, if you look back at the chart, it's still at the price that it was at IPO. It's nowhere near the price that it was through the fintech bubble and everything. And the performance of the company has just been improving and improving. So I have the utmost confidence in this company, in the CEO, in the whole fintech industry. This is one of the best stocks to get into. I still feel like it's a great entry point for this company. SoFi is definitely going to join the S&P Mid-Cap Index very soon, probably in the next few months, I'd wager. And after that, they're very close to joining the S&P 500 because they're approaching that $18 billion market cap. Every single metric of this company has just been improving, and it's only now getting the respect it deserves. The second stock that I'm going to talk about today is AST SpaceMobile. This company is a revolutionary company, and it's going to be a big player in the communications sector in the next 10-20 years. So if you don't know about this company, they are sending up satellites into space to act as cell towers so that there will be no more dead zones on planet Earth. So in the short term, in the next couple of years, they're going to eliminate all dead zones in the US, some parts of Europe, and Japan. So this company had a huge run-up and got caught up in a meme rally just a few months ago. And after all of that's cooled down recently, I feel like it's a good time to start a position or add more to your position. So I did add more to this company because I'm very confident in them. And I did raise my average cost because I did buy them when they were much lower. So we can see that I'm basically flat in the grand scheme of things. I have 200 shares, and I am very confident in this company to perform very well in the next few years. The thing with this stock is it is very volatile, but so far it's found some consolidation in this mid-20s range. Everything regarding the fundamentals of this company is going perfectly fine. They are working towards sending even more satellites up within this next year, and they're working on even larger satellites to boost their coverage. So everything is going well with this company. I will just keep adding even if it drops, and I think it's going to be awesome if it drops more because of the long-term upside this company has. The next stock up is Airbnb. I don't have a large position size in this company, but I'm starting to see some value in this company. So far we're basically flat with this company. I have 4.5 shares, which is around $600. So it's a very small position size, but I'm seeing that there's a lot of upside and a lot of opportunities with this stock. The thing is with Airbnb, their core business of short-term rentals in housing is very powerful. I mean, nowadays when you talk to anybody who does real estate, Airbnb always comes up in conversation. Do you do Airbnbs? Do you do long-term rentals, or do you do Airbnbs? Airbnb has just become this term that's used so commonly in real estate. Not only that, they're growing very nicely internationally as well as in the US. And we know that recently travel has kind of consolidated, and it's not as explosive as it was a couple years after the pandemic, obviously. The stock has done nothing since its IPO, and it's basically flat. And we have to see if there is opportunity for the upside. So recently on their earnings report, they brought up that they want to broaden their market and help out with renting things that are not related to housing. So for example, if you wanted to rent out a recording studio, you could do so on Airbnb. So that brings up the question of how many things can be changed into an Airbnb format. And the answer is there's quite a lot. They have a lot of room to work with to increase their market share and to include more offerings for people. And they also brought up that they want to be more of a commonly used app versus just on vacation time. So nowadays, when you want to use Airbnb, you just open the app, research where you want to go, book the vacation, and that's basically the extent of your usage of the app. But what they want to do is help you through your entire vacation. So if you want to find a restaurant, if you want to do any activities, they want to be able to help you with all of that. So that's definitely a positive for their business. So I will continue to be watching this company and possibly adding on to it because it is a very nice business model. So now we have HITI. HITI is a company that I'm very convicted in, and I feel like has a really high potential to outperform. My position right now is about flat. I've been raising my average price along with the stock price, and now I have 1,100 shares, which is valued almost at $3,000. The thing is, I feel like this company is so undervalued and doesn't get the respect that it deserves because of the industry it's in. But this company, I feel, has a real opportunity to 10x within the next decade. They are profitable, free cash flow positive, and they're growing their market share in the cannabis industry. And second, the cannabis industry is set to grow 12% on an annual basis from now to 2030, and HITI is one of the strongest leaders in that industry. Next up, we have e.l.f. Beauty. So it's a relatively small position in my portfolio at just 5.8 shares, about $700. This is one of the best cosmetics stock that you can own because of their low market cap and their high growth potential. The thing about e.l.f. Beauty is they provide such fantastic products for all ages at a very good price. So we know that in recessions and bad economic environments, things like lipstick and small purchases are usually going to do very well because people still want to buy things and not feel guilty about them. And e.l.f. is one of those companies that just executes really well, that you can always rely on to do well in their earnings and just raise guidance and continue to perform. When you see how much retail space e.l.f. has and how much mind share they have in their customers, you would think that this is a huge company, but they actually have a very small market cap. So there's still lots of upside, and their growth rates are just doing phenomenal. So this is another company that I will keep watching and possibly add more to. So next up, we have these two giant behemoth companies, Amazon and Google. People have been comparing them, which one's the better buy, Google or Amazon? I feel like Google has a better valuation. I feel like Amazon has more growth. Well, I think both are good. So why do I want both? I have a relatively medium size in Amazon, leaning on the smaller side, and I have a very small size in Google. So both stocks have performed about even for me, 15% up. And I feel like these are just great companies to own. These companies may not be your 10x opportunity in the next decade, but they are definitely going to compound and help your portfolio grow. I really like Google. I really like their valuation. I like their business models, and I love Waymo. If Waymo can execute well, which it has been so far, it's going to give this company another $1 trillion in valuation over the long term, obviously. Some investors are really liking the idea of having Google being broken up so that they can invest in, the different aspects of the company individually. But me personally, I'd prefer if they stayed Google by themselves and they had all of these areas too. So Google is definitely one of those companies that I'm definitely fine holding and buying, but I'm not looking to aggressively buy at these levels. Amazon is a slightly larger position for me. And the thing is, they have so many different business sectors that they're just going to do just fine. So I'm not worried about them at all. They're going to keep growing and compounding. So both of these I'm not going to be adding aggressively into, but if I see dips or any buying opportunities, I will be adding more to these two companies. So now we get to the REITs. We have Realty Income and Vici. I'm leaning towards Vici as a better buy because of O's customers. A lot of Realty Income's customers are going up, like Walgreens, 7-Eleven, those kind of physical stores are slowly losing market share, and they've just been decreasing. Although I don't mind buying more, I wouldn't want it to be such a large position in my portfolio. These two definitely have a place in your portfolio to generate some income and to take advantage of real estate prices. And the thing is, I bought these a long time ago actually, and especially Realty Income. And the thing is, I got in when they were at a very low price and they went up in price and now they're back down. So I think if you want to start a position in these companies, you're looking for a good time to get in, this is a perfect time to get in because the prices are much lower. I would lean towards Vici to add more into now because of their strong business in the gaming sector. Vici isn't as reliant on these downward trending companies like Walgreens, and I feel Vici is positioned better to perform well for the next few years. So next up we have Rocket Lab, which has skyrocketed so much, and I'm really happy with my share in this company, and I believe it's going to continue to do great. It's one of the best space stocks that you can buy. They have so much potential, so much upside that is not realized, that we don't even know about yet. The thing is, it's really hard for me to recommend this company to you to start investing in now because of how much it's run up. Now, the difference is if you're looking 20, 30 years in the future, then any price in this range is completely acceptable. It's definitely not in bubble territory. And if you're going to be holding for that long, it really doesn't matter. What matters is that you do get into this company. I'm very bullish on this company and its future, and I think it's going to do very, very well within the next 5 to 10 years, especially in the next 20 to 30 years. It's going to be a life-changing stock for most people. Next up, we do have Shopify, which has increased a lot, and it's a relatively small position for me, and I definitely don't mind adding more into it. Many investors think it's very overvalued, but it's fairly valued at this price in my opinion. They appeal to small businesses and large businesses, so their subscription model just helps them grow their top line every single quarter, and they're just doing fine. Shopify and Amazon really appeal to different kinds of sellers. Shopify helps you make a more personalized selling experience and website for you to engage with your customers. So as long as people are buying things online, Shopify is going to do just fine. So I do have a few bonus stocks here that I'm going to go over really quickly. So we have Palantir here. Palantir is one of those companies that I have to be invested in for the next 10, 20, 30 years because they're going to grow so much. It is a pretty nicely sized position in my portfolio, and it's grown quite a bit. So at this price, it is very expensive relative to where it was before, which is what makes it hard for me to recommend it to you if you're in a sort of short-term mindset, because I can definitely see this stock coming down in the short term, maybe consolidating or having a slight downtrend. However, if you're thinking 10, 20, 30 years in the future, this is a company that I would not want to sleep on. I can't even begin to imagine the compounding effect this company is going to have on my portfolio, just growing because of how much business they do with the government and commercial sectors. Both of those are just increasing, and in my opinion, they will definitely be $1 trillion company in the future. So this is definitely one to watch. If you haven't started a position in Palantir, definitely keep an eye on it and assess your situation. Next up, we do have HIMS. HIMS is a small position size in my portfolio. But if things go right for this company, it's going to go really right. So I am down on this position because I just recently discovered it. But from what I see, if they do execute well and they do secure the market share that they want to secure, they're going to grow so much. This could easily be a 10x kind of stock. At the same time, if they do fail, it's going to be an all or nothing thing. This is why my position size in this company is not as big, because of that risk. If I see that they keep improving, then I will keep buying and dollar cost averaging into this position. Recently, there was the news with Amazon getting into the pharmaceutical industry, and that's not a surprise to me. I think most investors knew about this. Amazon was always wanting to come into the pharmaceutical industry and be a big pharmacy, basically. So what HIMS does good is that they do personalized treatments. So if you need treatments for a few different things, they can bundle that up and get it to you very easily and discreetly. So when you have such a dramatic stock like this with so much news, literally in the past few weeks, I've just been seeing this company go up 10%, down 10%, up 10%, down percent every single day. When there's so much drama, so much news about this company, you have to take a step back and look at the numbers. And the numbers are really great. They've been increasing their subscribers. They've been increasing the amount of money they make on each subscriber. All those kind of things are just increasing. So obviously the numbers are really good, and we just have to see how this whole Amazon situation plays out. And it's all about consolidation. How much market share is Amazon really going to take? How much is HIMS going to be able to secure? And how much are they just going to grow altogether? Because obviously Amazon is not going anywhere. They want their hands on a lot of different pies, and HIMS is already very secure and they're just growing. So we'll have to see, and I will keep watching this stock, and if it makes any significant moves forward fundamentally, I will definitely be adding a lot more. So the last stock here that we're going to talk about is Lithium Americas, LAC. Now, LAC is a small position size in my portfolio, but this is another one that I'm slowly starting to build more conviction. The thing is, lithium prices have come down so much, and it's due to two things. First thing is the EV demand is not as high as it was before, and the second is we're getting lithium from all over the world. I do think lithium prices can recover, and in doing so, this stock is going to do phenomenal. One thing is, this stock is very dependent on their one location in Nevada, in the Thacker Pass, which is going to open in 2027. They're already in development, getting it ready for mining, and in 2027, they will be fully operational. If the next presidential administration does make it harder for other countries to send their commodities and products here, then this company also has a lot of room to grow because of that. Right now, we're getting most of our lithium from China, from other foreign countries, and it's very cheap to do so. So if something fundamental changes in that direction, then this stock can see a lot of upside. This is a stock that could easily 10x because of all those factors, but it also has a lot of risks. So definitely take a look deeper into this company before investing. So yeah, let me know what you think about my picks. And if you do own any of the stocks, please let me know. And thank you so much for watching, and I'll see you guys next time. Bye.